Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are talking about, see what news people are sharing. And obviously, I'm going to interject a whole bunch of my opinions all across the board. It's going to be commodity related, finance related, stuff like that. It could also be wealth building related. I'm starting to incorporate some of that stuff in there. Maybe that helps you out. Maybe it doesn't. But you can know how I live, at least. Not saying that my life is the greatest of all lives, but at least you can tell. I can show you how I did it. And I'm not saying that I've made it 100%. I'm getting close to retirement. I am 41 years old. I'm getting closer at least. If we get one big pull in commodities, I'll probably be good to go. So let's dive in. Let's take a look, see what's going on. And again, if you want to follow me, it's at finding_finance. And if you want to join the community, it's finding-value.com. You can become a platinum member, and you can see the midweek updates and the question and answer sessions that you can attend on the weekends. And you can see my portfolio, what I own, and all that stuff. So let's go in here. So the Headless Horseman makes a valid point because this is exactly how I think as well. It says, the more you look at intraday swings in metals or your stocks, the more you train your brain that it is important. We are playing for the big multi-month to multi-year moves. Remember, that's exactly what I am doing. I'm playing the big multi-year moves of the bull market, the secular bull market. And secular means 5 to 10 years. Cyclical means the 1 to 3 year type movements or shorter. And I think we are going through one gigantic secular shift of money rotating from technology and S&P 500 stocks into commodities and precious metals because of a multitude of reasons. Those reasons can include an increasing interest rate environment, which rotates money differently. That is a huge portion of it. That's the credit money expansion side. Then the supply side's all messed up of underinvestment and projects that can't keep up with world demand. That can include base metals like copper and extend into a bunch of energy projects like uranium, oil, and maybe natural gas, depending on what you're looking at and how localized it is. So we'll keep moving down. It says, what a weird economy we're in. It says it's back. The latest data from the Indeed wage tracker shows posted wages grew 5.3% year over year in May. This is actually pretty big here. Look at U.S. wage growth has moderated, but it was up around 9%, 8%, and 5%. That's pretty strong. That really is. I can tell you this. The place that I work at does not pay this amount in merit increases anywhere around here. That at least my normal job, and that's why I'm doing other things and creating dividend portfolios and other income cash flow generating opportunities. So Nick, the dividend investor educator, he says this little 2012 Honda Civic has been a huge part of how I've been able to build my dividend income over the past 6 years and stay debt free. No payment, paid cash, $7,000. The wealth vehicle, 165,000 miles strong, delayed gratification. I want to make a few comments here, all right, about this. What I do in my life is I literally look and try to reduce my expenses as much as possible that maintains a standard of living that makes me happy. So I know a lot of people say, wow, I need a Mercedes to make me happy. Guys, come on now. There are cars that like cheap little cars that are so fun to drive that do not cost a lot of money, that you can do the work on them yourself. And it's so rewarding to fix something and bring it back to brand new condition. It is so, at least for me, it's so satisfying. I just rebuilt brake calipers on my RX-8 in the front. The slider pins were getting stuck, so I was getting uneven pad wear. And then I just took the caliper off and I rebuilt the rubber seals all in there. Super easy to do. It's not very hard. But now the car brakes incredibly well. It's really fun to drive. And I bought that thing for $1,200, and I had to swap a new engine in it. Yeah, I dumped some money into it. I probably spent in total 6 to 7 grand of what I've got in the car in total now. But the thing rips it. It's so fun. And that's really not that expensive of a car. And that's what I do for fun. That's my hobby. So my other car, I purchased it brand new in 2005, and it was $7,500 was the sticker price. I got it because it was an insurance. So the insurance up in Minnesota, there was some hail. A hailstorm came through. Some cars had a little bit worse hail damage. Others didn't really have any. It was hard to tell. But they gave you a big discount after a hailstorm to buy the car. I got that big discount. It was $7,500, and that was brand new. I've had the car since brand new, since 2005, the entire time, just running the thing. Yes, I had to put new wheel bearings on it. Yes, I had to put new timing belt, new shocks in the front and rear. I've done the bushings all the way around. I've obviously done other maintenance. I've put a new idle air control valve. I had to put a new rubber hose for the intake. I've obviously done a bunch of maintenance on the car the whole time. But the car is really easy to do. It's not that hard to work on. It's very cheap components to buy. And the registration insurance on it, I've got liability insurance on it only. I currently have about 170 some thousand miles on the car. I'll probably, yeah, it's running good. I don't think I need anything else. I've had to do a couple of wheel bearings in the front. They've got the car has got kind of weaker wheel bearings. I would say that's probably one of the weakest links. It's there's like 3 weak points on my car. I'll kind of keep going through it, but anyway, that is how I built a bunch of wealth, is reducing my expenses and costs and maximizing income. There's been times where I didn't really try very hard to maximize my income, especially in my 20s. I played a lot of softball. I mean, a lot in the competitive group and stuff like that. But that's one thing you can do is just don't let the money leave your account. Try to figure out ways and be smart about things of how to keep money in your account. Get a quote on your insurance for home and car every 2 years. See if you can save there. See if you can save on just the little things. So yeah, it all adds up to a major savings. Coming on, it says gold GLD, but once it gets going, there's your big cup and handle pattern. And what this guy's got, he's got 3,000, 3,500, 6 grand is the top kind of this here, and 10 grand is way up there. We'll see what happens, guys. I'm not claiming to know the exact path that it takes, nobody knows the path. But if it does get up there, what that's going to do is it's going to reprice commodities completely different, because gold is the pricing mechanism. That's why they basically want to short the crap out of it and hold the price down, because you're holding down effectively the entire commodity complex. So Decade Investor says investing at least 25% of your paycheck every single month will change your life. Well, I mean, obviously that depends on how much you make. 25%, if you're making 100 grand a month, is a very big chunk. If you're 25% of making 2 grand, well, that's not as much, but that's probably more realistic to the people that are working right now. But I strived and have saved more than 25% of my paycheck every single month. I would say, especially when I was younger, I was saving probably upwards of 50 to 75% of my paycheck. I didn't make like tons of money, but I just didn't have any expenses. So I saved a lot of money when I was younger because I had no expenses. And I did that purposefully because I knew I was going to have kids later. I wanted to have kids. I didn't know how much. And I knew that I wasn't going to be able to save as much later on with all the expenses going up like that. So I chose in my 20s to save a lot of money. And now I'm still saving money. So next we've got 2008 versus 2023. What happens next determines if we are in a new bull market or experienced another monumental bear market counter rally. I don't like these types of comparisons. These guys just grab certain things up. And what I like to do is I like to understand, why did we have a 2008 crash? Well, it was a deleveraging event in the housing market. 2023, I don't think we're in the same type of market condition. I could be wrong, but we just don't have the inventory of house prices. So you're taking something where the driving factor behind it is drastically different than the driving factor behind this. What I would look at is probably the 2000-2001 timeframe. That's what I would look at. But I mean, maybe the fall is similar, and maybe we do get something similar like that. It's perhaps perhaps the case. But I like to understand the reasons why. Why is it falling? And in my opinion, if we were to look at this, it's because of interest rates. That's what I think. It says, if you're an investor, remember, investing is easy. Holding is hard. Conviction is harder. Start and don't stop. So I would say holding is pretty hard for most people, and conviction is even harder. But you have to figure out why you're holding the companies that you do. If you don't know why, it's a lot harder to hold them. And if you're going to make a lot of money, or if you want to make a lot of money and you want to at least take the stance of Buffett, Lynch, and all these other guys, you're going to have to figure out why you're holding it, what the value is, and be completely convinced. It also helps if you've got a couple under your belt so you kind of know how it works. Patrick says, is this enough evidence for you? Some paradigm shift events unfolding before the sleep crowd. Note, energy sector provides some of the highest dividend yields. Oh, and yes, gold and silver go bonkers when XOM breaks out versus the SPX. So we look at XOM versus the SPX, and we already broken out of its trend lines here, and we're sitting pretty good. Silver's also ready to break out of its trend line at any second. So we could see an everything type rally at some point. Is it this second? Maybe not, maybe so. No one knows that answer. And I know a lot of people want to know that answer. Well, when is it going to take off? When is it going to do this? Guys, we don't know the exact timing. What we're saying is it's lining up. We've broken the trend lines. You got to be patient. This is the time you hold, and you're just patient, waiting for it to happen. And then when it happens, people are going to do some FOMO type stuff. It's the way the markets work. Kevin, so I think he's using the correct area to basically apply and compare to. He said, we're solidly locked in a bear market. I remember well trading through the Y2K stock bubble. The bullishness and blind belief that everything was okay and we would make new highs following the blow-off top carved out in early 2000 was similar to these nutty cheerleaders today. You get that top, you come back, and this is your bull trap, and then you get absolutely shellacked behind the house. So yeah, that's what's happening. We're in this general location. It's happening. He says, now let this sink in. The top 5,000 US stocks have gone nowhere versus a useless yellow rock for over 50 years. So this is the Wilshire 5000 priced in gold, 1972, and we're back to that same level. There are benefits to holding gold instead of the Wilshire 5000. Those benefits are tax related. You're out of the system. It's hard to see. It's hard to tax. It's not really registered, all that stuff. And if you buy the correct metal, you don't have to pay taxes either. So they can go up from 1972, and you're actually better off holding gold than you are stocks. There are other ways that you can also play this, doing ratio games between the different metals. So I prefer that over just regular stocks. So we got here, if you're in the uranium space, let me ask you a question. How many planets, stars, and moons have to align to make this a better trade opportunity? Good question. And we are in the market conditions for uranium to take off. And I think it's going to follow whatever oil does and gold and all these other commodities. And I don't know if you could have a better alignment. It's all here. But keep in mind, last time we had uranium bull markets, we did not have the same alignment. We didn't have planets and stars aligned. We only had the moon aligned. And we'll call that credit expansion. And that credit expansion is what causes money to rotate differently. It's increasing interest rates and inflation. Here's an analysis. How would you feel getting a mortgage renewal offer from your neighbor Canadian chartered bank with these rates? The perspective. Borrower was hyperventilating current mortgage payments $2,350 plus or minus a month. This is $39.28, $38, $37, all through here. So it's a lot higher payments with the increased interest rates. And I know that some of these guys in other countries, they don't have 30-year fixed rate mortgages. So they can have their payments basically adjust given the interest rates to a much higher level. What I did is I tried to figure out, how do I reduce my payments? How do I reduce the outflows out of my account? And I did pretty well with that, with refinancing, buying a house at a pretty good price, and living in a state that's got very low property taxes, one of the lowest in the United States. This is from Christian. He says, this trend line in housing starts per 1,000 households. Think we might be in for a massive real estate boom. So really, this is housing starts per 1,000 households. And you can see that we've been in a downtrend line, and we just broke it to the upside here. And yeah, we could see an increase in annualized housing starts per 1,000 households. I don't know how high it's going to go. All I'm going to say is we could go above the average for a while, and that is what we need for a commodity bull market to happen. We don't need this to go to the moon. We just need it to be above average, which the average is about 1.3-ish million housing starts per month. So we've got that. Technical analysis. We've got oil market. I'm a contrarian here, but I continue to see no evidence of weak oil demand growth in the oil market. It may be as spectacular as some had hoped, but for now at least, global petroleum demand is doing fine. Consumption will hit an all-time high in 2023. We've got this, and I went over this yesterday with the Case-Shiller index over bank credit, Case-Shiller versus gold, and gold divided by total bank credit. So I won't go over that. We've got the U.S. manufacturing construction boom is massive. I keep having to raise the y-axis on this chart. Historic increases in computer electronic manufacturing thanks to the CHIPS Act, and massive increases in transportation equipment. Read cars, electric vehicles, thanks to the IRA. So this is U.S. manufacturing construction spending. Computer electronic manufacturing makes up more than 40% of manufacturing construction. And look at this thing take off, guys, from 2021. Boom. So we are increasing manufacturing construction spending dramatically. This is almost at 200 billion. It was 100 billion here, and it was down at 75 billion in 2021. Here is that U.S. inflation continues to trade within its historic pennant. Many call for extreme short-term outcomes one way or another. The boring outcome of 1%, 5% annual inflation for the next 30 years into the pennant apex remains a third possibility, where we just hang out in here inside the pennant for a long time. It's possible. Emerging markets looks pretty solid here. I like that one. Gold's looking solid, sitting on top of its support. Still looks good. I did put in here real estate to gold ratio and stocks to real estate ratio, which are incredibly cheap still. So this is Shiller versus gold. And then we've got stocks to real estate ratio, and stocks are very expensive. This could also be that bull trap, and then we head down lower. Or maybe not. I mean, we'll see. If you think gold and silver are boring at the moment, consider this gold priced in Turkish lira chart. Gold rose 18 times versus Turkish lira in the last 10 years. It will happen to your currency. Have to play this commodities bull right. Your future depends on it. Yeah, smart guy. Smart guy. I like it. He says, people will pay $700 a month for their car and won't bat an eye, but will say investing $700 a month is too expensive. Make it make sense. I can't. I never had a car payment in my life. I bought my car cash. It was like 8,000 something out of the door, with registration and taxes and all that other stuff. But 700 a month, guys. I mean, that's like, I mean, some of these guys' car payments are what my mortgage is, and I can't believe that. Like, I that just doesn't make sense. Let's go get a $1,000 a month car payment that the vehicle's depreciating. Then if you're driving it in Colorado, it's going to get sandblasted with all the sand on the road and hailed on. It's like, man, you're going to pay all that money for all that while it rusts out, gets sun faded, and depreciates. That just doesn't make any sense. But you know what? We need those people to buy new cars, so I can buy their used car and suck every last value drop out of it. The market cycle says early cycle bull markets usually are led by small caps. That is definitely not happening right now. It's because we're not in a bull market, guys. We're in a bear market for the small, the overall market, like Russell 2000 and S&P 500. The chart for silver price in WCU is looking brilliant, including a picture-perfect backtest. Important to valid chart since the current currency basket, WCU represents many major currencies, and since that orange support line has many touch points, we got a little backtest there. So that looks good for gold or silver. That one's silver. The final and third gold bull move, I was going to put boove, since Nixon closed the gold window is upon us. End of the rainbow investing stuff if you play it right. And if you don't, you'll get wiped out. Big change goes slow until it goes fast. So yeah, we are looking like we could potentially take off in gold. The 3 gold bull moves. 1, 2, and 3. And hopefully that plays out in our favor, and hopefully you're positioned well for it, and you don't get smoked by the inflation in the system. But that's what I've got for today, guys. We'll stop it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And don't forget, we've got a Saturday, 7 a.m. Mountain Standard Time question and answer session coming up. So I'll see you there if you're a part of the membership or part of the community. We'll see you on Saturday. Catch you later. This is Finding Value.